Take a look at these two charts. The yellow indicates the price of Bitcoin and the black line indicates the price of gold. You will notice a resemblance in the overall price movement of both these assets, and if they have been following a similar path, then the recent price surge of gold may as well lead to a price surge in Bitcoin shortly. Gold, which is a traditional safe haven asset, is currently experiencing a meteoric rise and hitting unprecedented heights. This surge has ignited speculations about the potential trajectory of Bitcoin, often dubbed digital gold. Historically, we have seen that Bitcoin's price movements show a tendency to follow those of gold, although with a slight delay. This pattern suggests that the recent gold rally could be a precursor to a significant upswing in the Bitcoin market. Several factors are converging to create a potentially bullish environment for Bitcoin. A decent chance of Federal Reserve rate cut, the post-halving effect typically associated with increased Bitcoin value, and the upcoming elections all point towards a positive outlook for the cryptocurrency market, especially Bitcoin. Moreover, Bitcoin's inherent scarcity and growing institutional adoption is further bolstering its appeal as a store of value. Now, let's understand why this correlation between Bitcoin and gold exists. The correlation between Bitcoin and gold is often attributed to their shared characteristics as safe haven assets, meaning that both these assets are seen as stores of value that can protect wealth during times of economic uncertainty or inflation. When investors perceive economic instability or inflation risk, they tend to seek assets that hold their value. Both gold and Bitcoin have historically been considered as such. Bitcoin is often referred to as digital gold due to its limited supply and perceived store of value properties. Similar to gold, investor behavior plays a crucial role. When gold prices rise, it often indicates a broader fear of economic downturn or inflation, which can also drive demand for Bitcoin as a hedge. It's important to note that while there's a historical correlation, the relationship between Bitcoin and gold can fluctuate. Bitcoin is a more volatile asset compared to gold, and other factors like technological advancements, regulatory changes, and market sentiment can significantly impact its price. While Bitcoin's supply is limited, like gold, its price is highly volatile, unlike gold. In times of economic uncertainty, inflation often rises. Bitcoin's value can potentially appreciate in such environments, acting as a hedge. And Bitcoin's price indeed has shown resilience during past economic downturns, further bolstering its claim as a store of value. However, it's essential to acknowledge potential headwinds. A heightened geopolitical situation in the Middle East could introduce volatility into the market and temporarily dampen Bitcoin's price. When we talk about uncertain times, it can mean both the economic downturn and also geopolitical tensions. Bitcoin acts differently in both these circumstances. Most are viewing Bitcoin as a safe haven asset in case of a USD crash and also in times of severe inflation. But when it comes to geopolitical situations, both the stock market and crypto market face a crash when investors pull out their investments and put them in safer assets like fiat currency, bonds, and gold. So this is where Bitcoin and gold differs. So while the correlation between gold and Bitcoin is not foolproof, the current circumstances present a compelling case for a potential Bitcoin bull run. Investors should carefully consider these factors while maintaining a watchful eye on global events. Let me know what are your thoughts on this and what mark do you see Bitcoin hitting in this bull cycle. If you like this video, make sure to show your appreciation by liking this video and subscribing to the channel.